Welcome to this session where we will plot the efficient frontier and optimal portfolio. Having navigated through the process of optimizing our portfolio to strike an optimal balance between risk and return, we now approach a highly instructive exercise, the visualization of the efficient frontier and the optimal portfolio. This part of our journey is dedicated to visualizing the outcomes of our optimization efforts. Through graphing the efficient frontier, we will explore the portfolios that deliver the highest expected return for a given level of risk. Additionally, identifying the optimal portfolio on this frontier will exemplify the practical application of maximizing the Sharpe ratio, a concept we have extensively discussed. Let's embark on this session and uncover the visual representations that encapsulate the core principles of portfolio optimization. And the first thing that we are going to do is to import the function plotting from the package PyPortfolioOpt. So I'm going to write from PyPortfolioOpt import plotting. Shift enter, and in fact I'm going to run all the cells. Now, assuming that expected returns and covariance matrix are already defined and that the efficient frontier object has been created with those data, let's get the return, risk, and Sharpe ratio for the optimal portfolio that we will use later for plotting the optimal portfolio. So I'm going to write over here EF, the object that contains the efficient frontier, portfolio performance, verbose equals true as parameter, so we will print the name of the variables, shift enter. And as you can see, we have the expected annual return of 28.5%. This is for the portfolio. The annual volatility of the portfolio, 22.5, and the Sharpe ratio, 1.16. Now let's create three variables that contain these three numbers. So I'm going to write over here, return optimal, comma, volatility optimal, comma, and Sharpe ratio. Actually, we are going to use only the first two, only these two, but as there are three numbers, we have to create three variables. I press shift enter. Now it is important to note that before plotting the efficient frontier, and each time that you plot the efficient frontier and optimal portfolio, we must generate the efficient frontier object using expected returns and the covariance matrix. Failure to do so will result in an error when attempting to run the graph. So let's create the efficient frontier object over here. I'm going to write efficient frontier curve equals to efficient frontier, the name of the function that we imported previously. And then as parameters, I'm going to use the same parameters that we used previously. Expected returns, covariance matrix. In fact, Colab is already suggesting me the name of the variable, and weight bands between 0 and 1 in order to restrict the short sellings in our portfolio. I press shift plus enter, and I have created the efficient frontier object. Now let's generate the points for the efficient frontier, but previously we have to create the figure. So we define the figure and the axis as plt pyplot dot subplots. With this line, I'm creating the canvas for the graph, for the plotting. Now I'm going to generate the points for the efficient frontier. I'm going to write plotting, the function that we imported previously, plot efficient frontier, and as parameter I'm going to use the object efficient frontier curve, the object that we created previously, ax equal axis, and show assets. I'm going to put these parameters as false. Then I'm going to put it as true so you can see the difference. Now let's mark the optimal portfolio on the graph with that red star. With the object axis, I'm going to use the method scatter, and I'm going to use the variables that we defined over here, volatility optimal as the X, return optimal as the Y, and marker as star. So I'm going to write over here, vol optimal, the X, red optimal, this one, that will be the Y, the marker will be an star with the size of 100, so we want a big star, and the color will be red. And as label, I'm going to write optimal portfolio. And now let's enhance the graph's readability. We're going to set the X label and Y label. So I'm going to write the object access dot set X label, volatility, parenthesis, standard deviation. And now let's define the Y label as expected return. Let's print the legends for both the optimal portfolio and the efficient frontier that will be automatically displayed. And finally, I will write pyplot.show, and I will correct this code as there is an S over here. It's show assets instead of show asset. Then I press Shift plus Enter, and we can see the efficient frontier and the optimal portfolio. In our graph, the blue line represents the efficient frontier, a concept that is central to modern portfolio theory. This curve delineates the set of portfolio that offers the highest expected return for a given level of risk, or alternatively, the lowest risk for a given level of expected return. Each point along this frontier corresponds to a portfolio that is efficiently optimized for risk and return. The red star over here marks the optimal portfolio, which is the point on the efficient frontier that offers the highest expected return for the lowest possible risk according to the Sharpe ratio. This portfolio is considered the most desirable for a risk-averse investor because it maximizes the expected return for a given level of risk. Now let's include in our graph the 20 assets. So instead of false, I'm going to put here true. I'm going to press Shift plus Enter, and we got an error. What happened? I want to show this because it is very important. As I told you before, it's important to note that before plotting the efficient frontier and optimal portfolio, we must first generate the efficient frontier object using expected return and the covariance matrix. Failure to do so will result in an error when attempting to run the graph. So each time that you run this code, before you have to run this one, you have to create the efficient frontier object. So I will press Shift plus Enter. I create the efficient frontier object, and now I will create the graph. Shift plus Enter. And as you can see, now we didn't get the error, but we got the assets. This black dot scattered across the graph symbolize the individual assets, the 20 assets that we analyze in our portfolio of European stocks. As we conclude this insightful session on plotting the efficient frontier and identifying the optimal portfolio, I want to extend a special invitation to all of you for our next challenge. Your upcoming task is not only to apply what we have learned by graphing the efficient frontier and the optimal portfolio, but to take a step further by incorporating the capital market line into your analysis. This time, we will dive into the dynamic and diverse world of the Indian stock markets. Using data from Indian stocks, you will have the opportunity to explore how different market conditions and investment opportunities in emerging markets like India can influence portfolio optimization and the principles behind the capital market line. So I look forward to seeing your innovative approaches and insightful analysis. Happy investing, and see you in the next session.